Hello, investors and traders. Let's kick things off with a bold and an exciting outlook. Over the past month, we've been emphasizing that the incredible 2-year bull run is nearing its end. Times are changing, and even if you're a long-term investor, one of the smartest moves you can make is to accumulate cash in preparation for the inevitable market downturn. Another key area of focusing we've been discussing the last month is the commodity market. One commodity in particular stands out today. We have also mentioned this commodity for the last month. I'm going to make a bold statement. Natural gas in the short and intermediate term could be the next Nvidia. Why natural gas? Let's dive into some facts. Nvidia and the new wave of super chips powering artificial intelligence, AI, demand enormous amounts of energy. These energy-hungry supercomputers require a reliable power source, and there's growing chatter in the industry that natural gas could become a significant beneficiary of this trend. Anything power related, whether for data centers or AI infrastructure, is becoming a dominant theme in today's market. Natural gas has the potential to play a pivotal role in this ecosystem. Think of it as a technology sector commodity, the lifeblood for powering data centers and AI systems. Rumors and speculation are fueling this rally, and natural gas could very well emerge as the primary energy source for electricity generation in this new technological age. Now is the time to start paying close attention to this opportunity, which we've been talking about commodities and natural gas for the last month. Other factors driving natural gas: cold weather in the U.S., freezing temperatures and blizzards are hitting America, driving up the demand for natural gas. New administration policies. A new administration coming into office in January may introduce policies favorable to natural gas and the energy markets. Again, I am not for Trump. I am not against Trump. My political opinions mean absolutely nothing. This YouTube channel is about building a system with no emotion, and it is unconcerned of who I like their political views. Next, geopolitical shifts in Europe. Changes in the Ukraine-Russian situation and the potential end of the LNG deal are influencing supply and demand dynamics. In 2023, we were touting commodities. We were touting natural gas. This is all deja vu. The X factor. While short-term and intermediate-term fundamentals focus on weather and economic policies, the X factor is whether natural gas can become the primary energy source for data centers. This is the story. These are the fundamentals, and this is the potential opportunity to explore in the natural gas market. Keep an eye on it. It could be one of the biggest plays in the months to come. Big surprise, not for us. Energy stocks take early lead in 2025 as natural gas shine. Energy stocks have kicked off 2025 with strong gains, outperforming the broader market as oil and natural gas prices climb higher. The S&P 500 energy sector, XLE, is already up 2.8% year to date compared to the broader indexes, GSPC, modest 0.6% rise. This marks a reversal from the energy sector lagging performance over the past 2 years. In fact, energy was the third worst performing sector in 2024 and the only one in the red for the last 2 years, while broader markets surged 53%. Think of it on a psychological basis. Many people have lost money in the energy sector for the last 2 years. It has not performed as well as the technology sector, which has gone straight up to the moon, specifically Nvidia and the Magnificent Seven. What if the new story is technology goes down and the energy sector goes up? This is what I'm predicting. Natural gas names are showing clear leadership, with independent producers like Ontario Resources, AR, and EQT Corp, EQT symbol, taking the lead. Natural gas futures, NG, have been trending upward in the recent months, driven by colder than expected weather, optimism over increased exports to Europe, and growing electricity demand. Europe runs a lot on natural gases, which is supplied a lot by the Russian-Ukrainian pipeline, which looks to be stopping soon. We're just talking fundamentals here, and we're going to get into the technicals, and we're going to get into the psychology of why natural gas should go higher. A shift toward natural gas. In 2025, the energy sector will be less about barrels of oil and more about billions of cubic feet of natural gas. We emphasize the intersection of technology and energy sectors with natural gas playing a critical role in powering data centers and AI infrastructure. Key drivers for energy stocks in 2025: colder than normal winter conditions, boosting demand for heating fuels; rising electricity demand fueled by technology advancements and data center growth; increased LNG exports to Europe as geopolitical shifts continue to impact energy supply chains; China's early travel surge. The Lunar New Year holidays are fueling oil demand earlier than usual. As global oil demand remains strong and natural demand surges, the energy sector is poised to remain a key player in 2025. Could this be the year of the energy comeback? Spoiler, yes, it will. Only time will tell, but so far, the outlook is bright, and so far, our predictions have been spot on. We're picking up where we left off in the last video. Once again, we mentioned previously, you might not like what we have to say, but just as in 2022, this feels like deja vu. While this statement may not win us subscribers or likes or even views, we need to be honest. The stock market, cryptocurrency, appears to be headed for a decline. Our strategy is clear. We'll be shorting rallies in both the stock market and cryptocurrency while focusing on buying commodities. In about a year and a half, we anticipate reversing our positions and going bullish again. We will not always be bearish, but we must not also always be bullish. Rounding up cash after a great 2 years in this stock market, it's not a bad idea. For long-term investors, we reiterate the crucial advice. You've had an incredible 2 years. Now is the time to take some profits, some chips off the table. This will position you to buy back those same assets at better prices. Pay attention to what insiders are doing. Insiders, CEOs, CFOs, they are selling their position. Warren Buffett is raising cash like it's 2022. BlackRock is selling. So all these people who are long-term investors, specifically Warren Buffett, is raising cash. We announced 1 month ago we went 90% in cash, and finishing up last 8 days ago to 100% in cash, just looking at natural gas and commodities. We firmly believe that natural gas could be the next Nvidia, and the commodities will dominate the short and intermediate term investment landscape. Additionally, we expect energy stocks to stage a strong comeback. Now is the time to stay focused and disciplined as we navigate this changing market environment. The time of filming of this video is January 8, 2025. 1 month ago, we've been telling you our plan on commodities. We have been buying natural gas, and I would love to buy more, but this market is not giving me a chance. Before we start, disclaimer: the information provided on our channel is for educational and informational purposes only and is not intended to be a substitute for professional financial advice. I want you to think we are in 4 different phases of a stock market. There's the accumulation phase, the growth phase, distribution phase, and declining phase. For the last 2 years in technology, we've been in the growth phase. For the last 2 years in energy stocks and commodities, we've been in the declining phase. Now things are reversing where the stock market looks to be in a distribution phase, technology, and the start of commodities is looking in the growth phase, specifically in natural gas. If I go back to October 2021 into June 2022, you can see how the GSG did, the commodity index. This is the same thing we are expecting. While from December 2021 to January 2022, the stock market sold off. Again, we had rallies in the stock market, but it still sold off. We predicted this 3 years ago and then predicted the 2 years of the bull market. And now all I'm saying is history will repeat itself. For traders and short-term investors, shorting into this market on rallies will also work. And we'll be getting into that in the future. But for right now, today's focus is the next Nvidia, natural gas. I want to start from the first, commodities index. Not all commodities are moving up equally, as if you combine all the commodities, it still doesn't look like a huge breakout. But clearly the energy sector looks good, and we feel the rest of the commodities will fall suit. But let's specifically look at the natural gas. Imagine getting involved in any natural gas companies or any ETFs. For the last 2 years, you've been disappointed. Why would you even think about getting into it? But last month, we told you about the breakout on high volume, and then it pulled back. But to give an official recommendation, on January 8th, we are putting in a natural gas bullish recommendation and do buying on pullbacks to 13.50 to 16 with an investing stop of 11.99. Emotion will say there is no way this stock is going up. It went down so much. Emotion will say I lost so much money in the energy sector for the last 2 years. Times are changing. Are we investing in a bull market? In the energy sector, we are. We are waiting for pullbacks on natural gas, and I might not get the pullback that I want. Are we avoiding cheap tricks? Well, actually not. This is pretty cheap, but it's not at its lows. A cheap trick is something at its lows. When it's breaking over here, the breakout could be amazing. We are prioritizing uptrends and exiting downtrends promptly, and we are maintaining consistency. I want you to go to a longer term chart and just imagine we break out from 17 to the high of 140, which was 2 years ago, which we recommended and which we did. Remember, the breakout point, the first opportunity is when a stock initially moves above its basing phase and enters an advancing phase. The second and safer time is when a stock pulls back towards the breakout point after the initial breakout frenzy. We broke out. Now we're trying to get back in to the breakout point to buy. And then we will do what's called continuation buy-in. During the advancing stage, particularly when the stock retraces back to the close to its moving average and consolidates when the stock breaks out above top of its resistance zone. We did this same thing 2 years ago. Technology, breakout, nobody believed it, continuation buying. We are still looking at natural gas at the overbought, oversold, and we are in good positions. For our medium term and long term, we have a lot of room to move upwards. But also the key is looking at the CCI indicator. And the CCI indicator, when we have a prolonged period above zero and not staying below zero with a MACD buy signal at disgusting lows, everything is lining up to tell us that natural gas is the next Nvidia. I'm giving you a disclaimer. I'm not always right. I'm not selling you anything. I don't want you to click on a link. I don't want you to buy affiliate marketing. I'm not selling you a software. I'm not selling you a newsletter. I'm just telling you my opinion. And my opinion says natural gas will go higher. You can get into stocks for the natural gas if it meets your criteria of getting into stock. I am doing CFDs and options off natural gas itself, the commodity itself, which is very risky. Even the ETFs in natural gas is very risky because of time value of money. All this is super risk, but this is my idea. This is what I'm going to do. Now it's to see if I'm right or wrong. And I've been wrong before, and I've been damn right before. You know the catchphrase, study it, analyze it, adapt it. Peace.